so much for not being able to have a down day in the market. Today, we saw the CPI data come out better than expected. And we're going to talk about what the Fed announced today. But first, take a look at the fear and greed index. We got over into greedy territory. Boom, smacked right back down into neutral territory. Once again, we look at the investor sentiment survey. We had another very bullish reading at 49.2. We look at Tesla today, down $22.37. Nobody thought Tesla was ever going to go back down. The shorts continue to get squeezed. And then all of a sudden today, we get a good economic news report. We spike up only to come crashing back down. Now, if you trade Tesla stock, watch out. We have several gaps to the downside that could be getting ready to come down and start getting filled. Let's not forget this stat that shows the NASDAQ has peaked out more times in the month of July than in any other month. So is this stat going to hold true once again? And everything's not as bad as what it looks like with Tesla, because if we come over and we look at Uber today was up $4.21, up 6% on the session. Let's not forget about the sleeping small caps, where we see the IWM all the way back up to the recent highs, up 3.63% on the session, while we see the NASDAQ actually down 2.2%. We see the diamonds actually close in the green as well, up 0.31, and the SPY was down almost 1% on the session. Now we come over and look at the dollar index. Notice what we did today. We wicked right into this swing point over here, and then we started to reject up and out. We look out here, we see when the news came out, the dollar came crashing lower, then it started to work its way back up. Will the dollar be able to regain all of its footings from what it lost during the news event today? Now, whenever we speak about the dollar, we also want to speak about gold. Look, gold was able to take out the swing point over here. So now it's a green light that we're probably going to come back and test all-time highs. And if we come up there, guess what? We'll probably go ahead and break above that area. So right now, I'd have to be in a bullish stance out there. Now we look at the news article right here from CNBC. Inflation falls to 0.1 in June from prior month, helping case for lower rates. And then we come over and look at the article from MarketWatch. The CPI fell in June. Great, but the Fed wants confirmation from its favorite inflation gauge. However, is that true? Did the Fed actually announce something today? And I think this article sums it up very well. Fed's Daily says data now justifies cutting interest rates. Now, they didn't say cutting interest rates in the future. They said cutting rates. I'm going to pose a question to you guys real quick. Do you guys think the Fed is going to cut rates at the next meeting out here in July? Because when we come over and look at the Fed watch tool, we can see in July, expected to keep rates the same. But then the next 3 FOMC meetings, the Fed watch tool is now pricing in the Fed cutting rates. And I shared with you guys earlier what Tom Lee had to say. And Tom Lee was saying the Fed's going to cut rates at least 3 times this year. Could it possibly be 4? And let's talk about this real quick. The Fed cutting rates, is this actually good for the market? And look at this, all right? It's cut, hold, cut, hold, cut. So if the Fed goes on an aggressive rate cutting campaign, keep in mind, every time this has happened in the past, the stock market has suffered major corrections. The least of the corrections has been a 27% decline. And this chart goes all the way back to the 1960s. So this isn't just a one-off event, so be very careful. Everybody's been looking for the Fed to cut rates. We got to be careful and understand why the Fed is actually willing to cut rates at this point. Now we look at the volatility index. We see the VIX was actually up 1% in the session. And let's not forget, the VIX was up yesterday as well, while the market was making new all-time highs. We come over and take a look at NVIDIA. NVIDIA is suffering a 5% pullback. Now it appears that maybe we have a case where NVIDIA is finally going to make a lower high. Then that could set up an ABC pattern on the way down. If indeed NVIDIA is going to follow suit, and keep in mind, if the ABC pattern is going to be validated, we must break below the swing point right over here at about 118.08. Then we'll see, do we overshoot the 100% level and start working on trying to fill some of these gaps that we have to the downside that have been left behind for quite some time. Now we come over and look at the SPY. We basically had a bearish engulfing candle. Now I've been warning you guys, the MACD indicator just simply not confirming the new highs. And the fact that we had 7 consecutive up days in a row, we were due for a down day. Now we'll see, do the bulls come back tomorrow and just rip it right back up and we start seeing new all-time highs once again in the market? On the 4-hour chart, we're just now starting to get across of the MACD lines. Then on the 1-hour chart, we see we had divergence right up here. MACD peaked out, that correlates with this high over here. But as the market peaked up to a new high, we see MACD indicator clearly had a lower high and now has a good separation of the 2 lines, working its way back down towards the 0 line. out here on the 30-minute chart, what do we see? Well, we came back down below yesterday's high, below value area low, and we came all the way through all the volume profile levels, and we were actually able to close the gap that we had from the prior day. So this morning we had a slight gap up. We were able to close that gap. We closed the gap from the day before. Then as we come over and look at the futures markets, what do we see? Big, nasty rejection candle. And even before that candle, look at what we had, right? We basically had a huge wick on top of that candle. And we were talking about this on stream and maybe even in some of the analysis videos as well. I said, watch out. If the market comes out with a good CPI print, if we sell off that news, that could actually be a change of character in the market. Anytime the market sells off on good news, or when the market goes up on bad news, that are things that we want to pay very close attention to. And look where we came down to, right next to the high volume area. Now, are we going to be able to make it all the way down to last week's untested value area high at 5578.50? That very well could be the case. Keep in mind, anytime we form a value area and we close outside of it within the next 1 or 2 sessions, meaning either this week or the following week, we are likely going to come back and test that area. So we want to keep that area on our chart. Now, this morning, I marked off this minus development area for you guys. I want to make everybody aware, Apex 7A, massive 80% sale off all their valuation accounts, past in as little as 1 day. And you can also get a 150K account for only $40. You can get a 250K account for only $40. And you get a 300K account for only $40. So if you want to take advantage of this offer, use the link in the description box down below and use the promo code Mike at checkout. Now this morning, I marked off this minus development area within the profile. And I said, when we come down to it, watch out, we could get a bounce. You might say, Mike, we didn't bounce, we sliced right through it. We actually come over here and we look on a smaller time frame chart. Look right here. What do? We essentially came right into that zone and we bounced out. And then as we came back down again, then we came right down through it. Now, if you look, you might say, well, that wasn't much of a bounce. Well, if you call 10.75 points not much of a bounce, I don't know what to tell you. On one S&P E-mini contract, that would be $500 of a bounce. And then we ultimately continue to cascade lower. As we look out here on the daily profiles, we see that big, nasty wick that we had when we had a good CPI number come out this morning. And look what happened. We sold off on that news. We continued lower, and now we've consolidated down here near the lows. And if you look, we have that untested point of control down here at 5625.50. If you look at where a majority of today's volume was transacted, right within, most of these other volume profile levels that we've had over the last several days. Now, the question is, do we get a bounce back up today? That is going to be very important. I'm going to look at that. And I really want to focus on this whole minus development area. If we start getting up into this area tonight, this is an area where I want to look for a potential rejection. Any of these minus development areas within the volume profile, watch out for a possible rejection on the way down. And I do want to warn you guys about a level all the way up here, anywhere from the candle wick up here to the candle body. Why is this important? Well, from a structure standpoint, we have broken below that and we have failed to come back and retest that level. So if indeed the market has a rally bullish day on Friday, this is going to be one of the areas I will want to watch if we start getting above the first minus development area. Now, as we look at the volume profile levels, we have value area low all the way down here at 5630.00. We have the point of control coming in at 5642.50. Value area high comes in at 5667.50. So if we're right here within value, how do I want to handle this? Well, as long as we are above value area low, I'm going to look for the market to try to push up towards the minus development area and then look to see if I can play a rejection on the way back down. If we start breaking value area low, I'm going to look for targets down towards 5625.50. And again, this is going to be a very easy if-then syntax. Now, here's something that might have you scratching your head today as we look at all the indices. The Dow was up 32 points. The NASDAQ was down 364 points. S&P was down 49 points. The Russell was up 7 points. However, look at advancing issues versus declining. We have a nasty down day in the market, but we have way more issues advancing. 74.6% of issues advancing versus 22.4% of issues declining. So depending on what stocks you were looking at, it might not have been such a bad day out here in the stock market. We come over and look at the sectors, and really the only 3 sectors in the red were communication services, technology, and consumer cyclicals. Everything else today was in the green, and real estate was one of the big benefactors. Why is that? Because now the market is starting to price in, we are going to get a rate cut. As we come over and look at the QQQs, what do we see? Big, nasty, bearish engulfing candle, but look right where we're coming down to. Is this nothing more than a head fake? Are we going to see the market go right back up, essentially reverse this down candle and start making new all-time highs once again? Now, if we pull our Fibonacci retracement level off the daily chart and we just simply measure this latest move up, where do we come down to? Right here near the 38% retracement. Now, I won't be surprised if we make it a little bit closer towards the 50 or even the 61.8 fib levels. That is something I want to watch as we move forward. Out here on the 1 hour chart, MACD indicator down towards the zero line. And you can see basically all day long, sell, 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 sell. On the 30-minute chart, what do we see? Well, we filled the gap over here. We came all the way down, filling the gap over here as well. And you can see we have very poor market structure all along the volume profile up around these areas. The MACD indicator is starting to base out. And with tomorrow being Friday, could it be a turnaround day? Because when we look, tomorrow 8:30 a.m., we have core PPI coming out. Then at 10 a.m., we have preliminary consumer sentiment, followed by preliminary inflation expectations. So as we come over and look at the NASDAQ futures markets, notice what we've done. We're all the way down at the weekly low, and look where we're very close to. Last week's value area high, which I warned you guys in Sunday's video, would be a high probability target either this week or next week. So we're much closer than what we saw with the S&P 500. So I'd love to see the market come right down towards that area. Go ahead and ding out that target. If we get down there, then I really want to watch this next high volume area on the composite profile, anywhere from 20,237 to about 20,184. Now, as we come over and look at the daily profile, just nasty selling on the way down. You can clearly see most of the selling was done in the NASDAQ. Value area high comes up here at 20,983.50. The point of control is way up here at 20,882.00, 20,481.50. Now, notice we are closing below value area low. So what does that set up? Well, I'm actually going to want to go long up towards that area and maybe hold a runner, see if we can push through that area. We can target some of these high volume nodes on the daily profile as potential targets, but watch out. We have a huge minus development area, and I want to go ahead and mark this whole level off. If we start seeing bullish price action in the markets tomorrow, this could be an area that I most certainly want to focus on. Then when we pull a Fibonacci retracement from today's high to today's low, notice where the 61.8 level comes in, right at the bottom of that minus development area. So do we simply come up, kiss it, and then start to reject back down? That's one of the plays I'm going to be looking out for tomorrow. Now, if you guys want to see how I use Bookmap to find high probability trades, watch this video right here.